Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, August 26th, and we'll see how things look for Wednesday, August 27th. Going over what happened in Tuesday's session, the S&P 500 closed slightly higher, posting a 0.41% gain and settling above the R1 pivot point at 64.58. This modest uptick helped recover losses from Monday's 0.43% decline. But the index remains just shy of overhead resistance at 64.68. In short, the market is treading water, neither showing significant strength nor weakness, with a noticeable lack of conviction among investors. The session began with a lower open, touching the intraday low at S1, which was at 64.29. Prices climbed steadily, surpassing the unchanged level and briefly testing resistance at the daily pivot of 64.48. Late-day buying pushed the index above this pivot point, supported by above-average trading volume, a welcome shift from the recent trend of lighter participation. Across the board, major indexes, including the Dow, S&P 500, NASDAQ, Russell 2000, and S&P 600, remain in uptrends. Notably, the S&P 600 small cap index has now generated a golden cross, echoing a similar bullish signal seen earlier in the Russell 2000 small cap index. These technical formations underscore the market's underlying resilience even amidst mixed signals. Looking at economic data and market drivers, Tuesday brought some encouraging numbers. Durable goods orders significantly outperformed expectations, rising 2.8% against a forecast of a decline of 3.5%. This strength signals robust economic activity in key manufacturing sectors. However, housing price indexes, including the FHFA and Case-Shiller, showed slight declines, which could ease affordability pressures for prospective homebuyers. Consumer confidence climbed to 97.4, just above the expected reading of 96.3, but below the prior reading of 98.7. This suggests a cautiously optimistic consumer base, though we'll need to see sustained improvement to confirm broader economic momentum. Interest rates eased slightly to 4.26% from 4.28%. Investors are now looking ahead to critical reports later this week, including GDP, which has an inflation component, and the core PCE data due out on Friday. These releases will hopefully provide further clarity on inflation trends, especially after recent concerns that sparked the PPI to rise sharply. According to the FedWatch tool, market participants are increasingly pricing in a Federal Reserve rate cut in September, which could further shape market dynamics. Looking at the Fed and political developments, in a surprising development, President Trump's move to dismiss Federal Reserve Governor Lisa Cook has ignited a legal and political firestorm. This action raises constitutional questions about the independence of the Fed, while the markets have largely shrugged this off as news for now, viewing it as a political maneuver. This story should continue to be monitored for its potential implications concerning monetary policy and investor sentiment. Shifting over to sector performance and the technicals, mega-cap stocks outperformed slightly but still outpaced the broader market. Small caps, however, continue to show strength and are looking more bullish. Discretionary sectors are also showing relative strength compared to staples, suggesting investors are adopting a less defensive posture. Technically, the market is sending mixed signals. Short-term indicators, including the Williams %R, show some positive conviction, as well as the stochastics, while the McClellan oscillator is still negative, and momentum indicators, including the MACD, are showing divergences. Meanwhile, the Sean Trend Meter leans positive, but overall the market lacks a clear directional push currently. Looking ahead to Wednesday, August 27th, all eyes are on NVIDIA's earnings report due after the market close. As a bellwether for the tech sector and the broader market, NVIDIA's results could either propel the S&P 500 past its current resistance at 64.68 or reinforce the ceiling, potentially triggering a pullback. Economic data will be light, with only the MBA Mortgage Applications Index due. Geopolitical and trade developments remain on the back burner for now, with minimal market impact. Seasonally, August is often a challenging month for equities, but historical data from 2002 and recent market resilience suggest potential strength. Sentiment is positive but not overly exuberant, and the ADX indicator points to a weakening trend, though it is positive. In conclusion, the S&P 500 remains positive across all time frames, but it's grappling with overhead resistance and a lack of strong conviction. NVIDIA's earnings loom large as a potential catalyst, while upcoming economic data, including GDP and core PCE, will provide critical insights into inflation and monetary policy. Thank you very much, and I will talk to you in the next podcast.